ExamPrep.School. Missouri Insurance Navigator Exam, Exam Code 84. There are 6 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Affordable Care Act, Basic Health Insurance Concepts, Health Insurance Exchanges, Missouri statutes, rules, and regulations related to health insurance, Navigators, Outreach and Education. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Under the ACA's guaranteed issue requirement for individual health plans, what is the maximum pre-existing condition waiting period an insurer may impose? A. 90 days. B. 60 days. C. 30 days. D. 180 days. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like, longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is A. The ACA limits any pre-existing condition waiting period to no more than 90 days under the guaranteed issue requirement for individual market plans. Reason B is not correct. A 60-day waiting period is below the ACA limit, which is longer. Reason C is not correct. A 30-day waiting period is shorter than the maximum allowable under ACA rules. Reason D is not correct. A 180-day waiting period exceeds the maximum permitted by the ACA. Question 2. Under the ACA's community rating limits in the individual market, what is the maximum permissible age rating ratio between the oldest and youngest adult policyholders? A. Dukweon. B. Thrasahnen. C. Folsby. D. Manwaits. The correct answer is B. The ACA's community rating rules cap the age rating ratio at 3-to-1 for adult policyholders in the individual market. Reason A is not correct. A 2-to-1 ratio understates the allowable spread under ACA community rating rules. Reason C is not correct. A 4-to-1 ratio exceeds the community rating limit set by the ACA. Reason D is not correct. A 5-to-1 ratio is above the ACA's maximum permissible age rating differential. Question 3. A 45-year-old applicant with a documented heart condition applies for coverage under a non-grandfathered health plan that takes effect January 1st. During underwriting, the insurer proposes a 6-month waiting period before covering any treatment related to the heart condition. Under ACA reforms, which practice is prohibited? A. Require a physician's statement confirming the severity of the condition before coverage begins. B. Exclude coverage for the condition for the first 90 days. C. Impose a 6-month waiting period before covering the heart condition. D. Apply a separate $1,000 deductible specifically for treatment of the condition. The correct answer is C. The correct answer prohibits any waiting period longer than 90 days for pre-existing conditions under ACA reforms, so a 6-month waiting period is impermissible. Reason A is not correct. Plans may request supporting medical information but cannot impose extended exclusions. Requiring physician statements is allowed underwriting practice. Reason B is not correct. Excluding coverage up to 90 days is permissible because short waiting periods of up to 90 days comply with ACA regulations. Reason D is not correct. Assigning cost-sharing requirements such as condition-specific deductibles is allowed, as long as they don't extend waiting periods or exclude conditions. Question 4. A health insurer for a non-grandfathered individual plan wants to control costs by placing limits on benefits. Which of the following practices is permitted under the ACA's rules on annual and lifetime dollar limits for essential health benefits? A. Establish a lifetime cap of $1 million on all essential health benefits. B. Impose a $25,000 annual limit on non-essential services. C. Implement an annual limit on inpatient hospital benefits. D. Set a lifetime limit for outpatient mental health services. The correct answer is B. The ACA prohibits annual or lifetime dollar limits on essential health benefits in non-grandfathered plans, but annual limits on non-essential services are allowed. Reason A is not correct. Lifetime caps on essential health benefits are banned under ACA reforms. Reason C is not correct. Inpatient hospital services are essential health benefits and cannot have annual dollar limits. Reason D is not correct. Outpatient mental health care is an essential benefit and cannot be subject to lifetime dollar limits. Question 5. Mary's group health plan covers adult children up to age 26. Mary's 26th birthday is May 10th, and her plan uses calendar months. Under ACA dependent coverage rules, which statement correctly describes when coverage must end and any special enrollment rights? A. Coverage extends to the end of the calendar year in which the child turns 26, with no special enrollment period. B. Coverage continues through the last day of the month of the 26th birthday. Then a 60-day special enrollment period is triggered. C. Coverage terminates on the child's 26th birthday with only a 30-day special enrollment period. D. Coverage remains until the next plan renewal after the 26th birthday, plus a 60-day special enrollment period. The correct answer is B. Under the ACA, dependent coverage must end at the close of the month in which the adult child turns 26, and the child must receive a 60-day special enrollment period to enroll elsewhere. Reason A is not correct. Coverage cannot extend to year-end once the dependent turns 26, and a special enrollment period is required. Reason C is not correct. Termination occurs at month-end, not on the birthday, and the special enrollment period is 60 days, not 30. Reason D is not correct. Coverage does not continue until the next renewal after turning 26. It ends at month-end with a 60-day SEP. Question 6. Which of the following services is not classified as one of the 10 essential health benefits, EEHBs, that health plans must cover under the Affordable Care Act? A. Pediatric services, including oral and vision care. B. Durable medical equipment. C. Routine adult dental care. D. Prescription drugs. The correct answer is C. The 10 essential health benefits include pediatric services, oral and vision care, durable medical equipment, and prescription drugs. Routine adult dental care is not listed as a standalone essential health benefit, although pediatric dental services are required. Reason A is not correct. Pediatric services with oral and vision care are explicitly included among the essential health benefits. Reason B is not correct. Durable medical equipment is one of the 10 essential health benefits under the ACA. Reason D is not correct. Prescription drugs are listed as an essential health benefit category. Question 7. A policyholder with a silver tier ACA plan receives 3 types of non-emergency care: wound repair at an urgent care center, skilled nursing services at a rehabilitation facility, and in-home physical therapy through a home health agency. Under the EHB ambulatory patient services category, which service is classified as an ambulatory patient service? A. Wound repair at an urgent care center. B. Skilled nursing services at a rehabilitation facility. C. In-home physical therapy through a home health agency. D. None of these are classified as ambulatory patient services. The correct answer is A. The correct answer is wound repair at an urgent care center because ambulatory patient services include outpatient clinic and urgent care visits, whereas skilled nursing and home health care fall under separate EHB categories. Reason B is not correct. Skilled nursing facility care is categorized under institutional care, not ambulatory patient services. Reason C is not correct. Home health agency services are a distinct EHB category, separate from ambulatory patient services. Reason D is not correct. At least one of the listed services qualifies as ambulatory patient services, so saying none is incorrect. Question 8. During a cross-country road trip, a covered individual in a bronze tier ACA plan experiences severe abdominal pain and is treated at an out-of-network hospital emergency department. After treatment, the individual receives a bill that includes charges exceeding the usual in-network cost-sharing amount under the ACA Emergency Services EIHB provisions. Which coverage guarantee applies? A. The plan must apply in-network cost-sharing to emergency services and prohibit balance billing. B. The plan may apply out-of-network cost-sharing to emergency services without prior authorization. C. The plan must require pre-authorization before covering any emergency services at an out-of-network facility. D. The plan may balance bill for non-emergent services even if emergency care was provided. The correct answer is A. The correct answer is that emergency services must be covered at in-network cost-sharing levels, and balance billing is prohibited, ensuring financial protections regardless of facility network status. Reason B is not correct. Out-of-network cost-sharing cannot be applied to emergency services under ACA EHB rules. Reason C is not correct. Pre-authorization cannot be required for emergency services at out-of-network facilities under ACA EHB provisions. Reason D is not correct. Balance billing for emergency services is prohibited even if some care is non-emergent. Question 9. A newly certified navigator reviews sample ACA compliant plan. Summaries and notes different inpatient cost-sharing designs. Which structure represents the most common pattern for hospitalization under the EHB coverage designs? A. A combined plan deductible that applies to inpatient hospitalization followed by coinsurance. B. A flat per admission copayment applied uniquely to each hospital stay with no coinsurance. C. A separate inpatient-specific deductible that does not count toward the general deductible. D. A per-day copayment for the first 3 days of hospitalization, then only coinsurance applies. The correct answer is A. The correct answer is a combined plan deductible followed by coinsurance, as most ACA plans use a single deductible that applies to all EHB categories before coinsurance for inpatient services. Reason B is not correct. A flat copayment without coinsurance is uncommon for ACA inpatient benefit designs. Reason C is not correct. Separate inpatient deductibles that do not count toward the general deductible are rarely used in ACA plans. Reason D is not correct. Per-day copayments followed by coinsurance are atypical compared to the standard deductible plus coinsurance model. Question 10. Under the Affordable Care Act, the term household for determining eligibility for advanced premium tax credits and cost-sharing reductions refers to which of the following? A. Individuals listed on the federal tax return, including the taxpayer, spouse, and dependents claimed on that return. B. All legal residents in the household, including foster children, regardless of tax return status. C. All persons related by blood or marriage living at the same address, whether or not claimed on a tax return. D. The taxpayer and spouse only, excluding any dependents over age 18. The correct answer is A. The correct definition of household for ACA subsidy eligibility follows the federal tax household, including the taxpayer, spouse, and individuals claimed as dependents on the same tax return. Non-dependent residents or dependents not claimed on that return are excluded. Reason B is not correct. This is incorrect because individuals not claimed as dependents on the tax return, such as foster children not listed, are excluded from the household count for ACA eligibility. Reason C is not correct. This is incorrect because household membership for ACA purposes is based on federal tax filing and claim dependence, not solely on residency or relationship. Reason D is not correct. This is incorrect because dependents claimed on the tax return are included regardless of age if they qualify as dependents. Question 11. Four individuals are seeking coverage through the Missouri health insurance marketplace. One relocated to Missouri on September 1st, established a permanent residence, and plans to stay year-round. One works seasonally in Missouri and returns to Iowa each off-season. One maintains a primary home in Illinois but commutes daily to Missouri for work. And one is an international student, temporarily living in Missouri during the academic year, but plans to return overseas after graduation. Which individual meets the marketplace's state residency requirement for enrollment? A. The seasonal worker who spends 6 months each year in Missouri and then returns to Iowa. B. The individual who relocated to Missouri on September 1st, established a permanent residence, and plans to stay year-round. C. The commuter who maintains a primary Illinois address but drives daily to Missouri for employment. D. The F1 student temporarily living in Missouri during the academic year but planning to return overseas after graduation. The correct answer is B. The correct answer describes an individual who has established a permanent Missouri residence and intends to remain there year-round, satisfying the marketplace residency requirement. Reason A is not correct. Spending only part of the year in Missouri means the individual has not established continuous residency. Reason C is not correct. Maintaining a primary home in another state indicates the commuter does not meet Missouri residency requirements. Reason D is not correct. Planning to leave Missouri after graduation shows no intent to reside year-round in the state. Question 12. An enrollment counselor reviews applications from 4 non-citizen clients seeking marketplace coverage. One is a lawful permanent resident with a valid green card. One holds an F1 student visa while attending a Missouri university. One works in Missouri under a valid H-1B visa. And one resides in Missouri without any immigration documents or status. Which individual does not meet the marketplace's lawful presence requirement for coverage eligibility? A. The lawful permanent resident holding a valid green card. B. The university student living in Missouri on an F1 visa. C. The professional working in Missouri on a valid H-1B visa. D. The individual residing in Missouri without any immigration documents or status. The correct answer is D. The correct answer identifies the individual lacking any recognized immigration status. Without lawful presence, this person is ineligible for marketplace coverage. Reason A is not correct. Holding a green card confers lawful permanent resident status and satisfies the lawful presence requirement. Reason B is not correct. An F1 student visa grants lawful non-immigrant status, meeting the marketplace's lawful presence criteria. Reason C is not correct. A valid H-1B work visa is a recognized lawful non-immigrant status eligible for marketplace enrollment. Question 13. Which describes how the Advanced Premium Tax Credit, APTC, directly reduces an individual's monthly health insurance premium? A. It provides additional cost-sharing reductions to lower copayments for eligible enrollees. B. It reimburses eligible policyholders for covered medical expenses after they meet their deductible each plan year. C. It caps maximum out-of-pocket expenses regardless of service costs for enrolled individuals. D. It pays a portion of the monthly premium directly to the insurer based on household income relative to the federal poverty level. The correct answer is D. The Advanced Premium Tax Credit is an upfront subsidy that lowers monthly premiums by paying a portion of the cost directly to insurers based on income eligibility. Reason A is not correct. Cost-sharing reductions lower copayments and coinsurance, but the APTC directly offsets premiums, not cost-sharing. Reason B is not correct. This describes reimbursement for medical expenses, not a premium subsidy paid in advance. Reason C is not correct. Out-of-pocket caps are plan design features, not the function of the APTC subsidy. Question 14. A 42-year-old single filer with an annual household income at 180% of the federal poverty level enrolls in a health plan through the marketplace. The Consumer Navigator explains that cost-sharing reductions will only apply if the enrollee selects which type of plan? A. Catastrophic plan. B. Bronze tier qualified health plan. C. Silver tier qualified health plan. D. Gold tier qualified health plan. The correct answer is C. Cost-sharing reductions are only available to individuals with incomes between 100% and 250% of the federal poverty level when they enroll in a silver tier qualified health plan, which adjusts deductibles, co-payments, and out-of-pocket limits accordingly. Reason A is not correct. Catastrophic plans are reserved for individuals under 30 or those with a hardship exemption and do not qualify for CSR benefits regardless of income. Reason B is not correct. Bronze tier plans have the lowest premiums and highest cost sharing, and CSR benefits cannot be applied to them. Reason D is not correct. Gold tier plans have higher premiums and lower cost sharing than silver, but are not eligible for cost sharing reductions. Question 15. Under the primary care physician PCP gatekeeper model in an HMO, the PCP's main function regarding specialist services is to A. Negotiate rate contracts with specialist providers. B. Authorize non-emergency referrals to in-network specialists. C. Adjudicate claims for outpatient specialty procedures. D. Directly bill patients for out-of-pocket specialist charges. The correct answer is B. The PCP gatekeeper authorizes non-emergency specialist referrals to control utilization and ensure coordination of in-network care. Reason A is not correct. Negotiating provider contracts is performed by plan administrators and network managers, not the PCP. Reason C is not correct. Claims adjudication is handled by the insurer's claims department rather than by the PCP. Reason D is not correct. PCPs do not bill enrollees for specialist services. Billing is managed through the insurer's billing systems. Question 16. Which type of service in most HMOs typically does not require a primary care physician referral before access? A. In-network dermatologist consultation for routine skin exams. B. Emergency department evaluation for acute symptoms. C. Physical therapy sessions for non-urgent rehabilitation. D. Elective cosmetic surgery procedures. The correct answer is B. Emergency services are exempt from prior PCP referrals to ensure timely access to urgent care without administrative delays. Reason A is not correct. Routine dermatologist visits generally require a PCP referral under standard HMO protocols. Reason C is not correct. Physical therapy usually necessitates prior authorization or a referral to control utilization. Reason D is not correct. Elective cosmetic procedures are typically non-covered or require specialized referrals and approvals. Question 17. Sophia has a PPO plan with a $500 out-of-network deductible, already met, 30% out-of-network coinsurance, and a $2,500 out-of-pocket maximum. She visits an out-of-network dermatologist who bills $200 for a procedure. The plan's allowed U and C amount for this procedure is $120. What amount will Sophia owe for this service? A. $60. B. $36. C. $116. D. $200. The correct answer is C. This option is correct because the plan's coinsurance is applied to the allowed amount of $120. 30% of $120 equals $36. And Sophia is also responsible for the balance billing difference between the billed charge and the allowed amount. $200 minus $120 equals $80, resulting in a total patient liability of $116. Reason A is not correct. This selection incorrectly applies coinsurance to the full billed charge rather than the allowed amount. Reason B is not correct. This choice calculates only the coinsurance on the allowed amount and omits the balance billing difference. Reason D is not correct. This option ignores the out-of-network coinsurance and balance billing despite the deductible being met. Question 18. According to IRS guidelines for health savings account, HSA eligible high deductible health plans, which of the following correctly states the minimum annual deductible amounts? A. A combined out-of-pocket maximum of $2,000 for self only and $4,000 for family coverage. B. At least $2,500 for self-only coverage and $5,000 for family coverage. C. No deductible on preventive services and a $500 deductible for other services. D. At least $1,500 for self-only coverage and $3,000 for family coverage. The correct answer is D. The IRS defines HSA eligible HDHPs as having annual deductibles no less than $1,500 for individual, self-only coverage and $3,000 for family coverage, ensuring higher out-of-pocket responsibility before plan benefits apply. Reason A is not correct. This option describes out-of-pocket maximums rather than the required deductible amounts for HSA-eligible HDHPs. Reason B is not correct. These deductible amounts exceed the IRS minimum thresholds and are not required for HSA eligibility. Reason C is not correct. Preventive services are exempt from the deductible, but the plan must still meet the overall minimum deductible amounts for other services. Question 19. Maya is covered under an IRS qualified high deductible health plan for 2024 and wants to contribute to a health savings account. Which additional condition must be met to establish and contribute to an HSA for the current year? A. Enroll in a limited-purpose flexible spending account alongside the HDHP. B. Be enrolled in Medicare Part A to qualify for tax advantage contributions. C. Have no other health coverage except an HDHP with only permitted preventive services coverage allowed. D. Meet the HDHP deductible before making contributions to the HSA. The correct answer is C. This option is correct because HSA eligibility requires that the individual be covered solely by an IRS-qualified HDHP and prohibits other health coverage except for limited preventive services. Reason A is not correct. This is incorrect because enrolling in a flexible spending account is not required and may disqualify HSA contributions unless it is a limited-purpose FSA. Reason B is not correct. This is incorrect because enrollment in Medicare Part A disqualifies an individual from contributing to an HSA. Reason D is not correct. This is incorrect because the requirement to contribute is not contingent on meeting the deductible first. Contributions can be made regardless of deductible status. Question 20. Which statement best defines a health insurance deductible and describes when it applies to covered services? A. A fixed amount the insured pays each benefit period before the insurer pays for covered services, excluding preventive care. B. The percentage of covered medical expenses paid by the insurer after the insured meets the deductible. C. A predetermined service fee that the insured must pay directly at each provider encounter, regardless of the plan deductible or coinsurance amounts. D. The portion of covered expenses that the insurer pays on behalf of the insured prior to the application of coinsurance or copayments. correct answer is A. The correct answer describes the deductible as the annual fixed amount the insured must pay before the insurer covers non-preventive services, which aligns with standard health insurance definitions. Reason B is not correct. This describes coinsurance, which is the insurer's percentage payment after the deductible, not the deductible itself. Reason C is not correct. This refers to copayments fixed service fees rather than the annual amount due before coverage begins. Reason D is not correct. This option focuses on the insurer's payment portion rather than the insured's pre-coverage payment obligation. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below. We read them all. Find full practice exam books in the description or at ExamPrep.School.